Starting with China, the outcome there has been more uncertain, as we all know. The macro news has been mixed at best, and recovery in consumption has been slower than many had anticipated. So overall, I think there's some caution there among the market. However, I will say that there have been some signs, notable signs of improvement. For example, a strong operator like Yum China, a quick service restaurant operator based in China, is seeing notable and meaningful recovery in same-store sales, which is now recovered nearly to its pre-COVID levels. And much maligned text, even in the much maligned internet space, e-com GMV growth is showing signs of acceleration and improvement, albeit from a lower base. And there's also been much that talked about how the pent-up travel demand in China hasn't translated to a lot of outbound travel. Some of that has to do with logistical issues. For example, there being a limited number of capacity in terms of outbound flights. But I think Macau is an exception. And in fact, Macau has been quite successful in capturing a lot of that pent-up travel demand. So when you look at those casino operators in Macau, their numbers have been quite strong because there's certainly demand there. I think it's just a matter of where they're going.
I've got to ask you because, it's the case is often made when it comes to China and the press valuations that they're sitting on right now. You can look at the tech stocks, you can look across the gamut, that it's almost like, a coiled spring. There's all this, pent-up intent that if you get one piece of good news, that the equity values are going to explode to finish out the rest of the year. But if we don't get any big stimulus, if we just get the dribs and drabs that we've been getting, is it reasonable to expect that there is going to be significant upside this year in 2023 for investors?
That's a good question. Although, I would believe that not many are expecting any sort of meaningful or sizable stimulus. Now, that could change if this current economic backdrop were to sustain. That being said, what we're hearing as of late, even after the latest news, is that the government isn't quite willing to provide the kind of stimulus one might think is sizable or impactful enough to provide a jolt. So I'm not necessarily looking for that discrete event that's going to propel these stocks to new levels. You're absolutely right. If you look at the valuation, they look very much reasonable and attractive. And I think there are businesses with strong fundamentals that are being boiled down, so to speak. But I think it's still going to be somewhat of a moderate and a sustained recovery, if anything, rather than something that's going to see a big jolt, like, for example, what we saw last year when the zero COVID policy was lifted.